Hello guys, hope you're having a good day. So what we have here, I want to have here beginners class on trading. So we'll be talking about market structure. I know you will all be hearing about market structure. What market structure is all about. Some people have different versions, but I want to tell you is that market structure is the study of the market behavior. Simple. Study of the market behavior, how the market is moving, and how the market, what the market is saying, that is market structure. Whether the market is trending, is that trending or it is ranging. That's it. So market structure is the study of how the market behaves, the behavior of the market. And if you can understand what market structure is saying, if you can understand what market structure, or you master the skills, when we master the skills of market structure, when you open your chart, you will be able to answer these questions. When is the right time to enter the market? Why are you entering the market? Who is in control of the market, either buyers or sellers? When is it right? Okay? When you need to stay away from the market and when you need to exit the market. That is market structure for you. So let's go straight to business. So in markets, we have, let me say, three types. We have the trending market, which can be bullish, which is uptrend, or the bearish market, which can be bearish, which is bearish, downtrend. And we still have the ranging market, that is ranging market. The market is moving sideways. It's just moving. It's not making higher highs and higher lows. It's not going up. It's not going down. It's just going sideways. That's a topic for another day. So let's talk about the uptrend market. When we are talking about uptrend or bullish market, we are simply saying that if you can see the market. This is an uptrend. This is an uptrend. The market is creating higher lows and higher highs. Higher lows. Okay, let me show you. The market is creating higher lows, higher highs, higher lows, higher highs. Are you getting me? Higher lows and higher highs. That's what the market is doing in a trending market. I don't know whether you are with me. In a trending market, that's what the market is doing. Your H, which is higher lows to my higher highs to my higher lows, breaking this part, creating another higher high, coming down, creating another higher high. When the market is doing such a thing, the market is what? Going to a uptrend. It's forming an uptrend to the upside. That is what you will see on everyday market. So let's go. Let's continue. So that time we're going to talk about the bearish market. And you must have heard of it. The bearish market. Bearish market. Okay, we're talking about the bearish market, which is this market here. Are you following? The market is creating a lower lows. The first one is higher highs, higher low to a higher high, but this one is creating a lower low to lower high, lower low to lower high, lower low to lower high, lower low to lower high. Are you getting me? It's coming down, lower low to lower high, lower low to lower high, lower low to lower high. Then that is what we call is descending. The market is descending downward, which is a bearish market. Bearish market for you. Then we have a sideways market. What do you mean by market is moving sideways or market is ranging? Some books you will see there is a choppy market, but let's just stick to sideways market, which is ranging. In a situation whereby we talked about a ranging market, we are just saying that the market is moving in this manner. Are you getting me? It's not making higher lows. It's not creating an uptrend. Neither is it creating a downtrend. Are you with me? Neither is the market creating a what? A downtrend. The market is just moving straight up. It's not breaking anything. It's not breaking. It's just, or they'll call it, is consolidating, or the market is consolidating at one region. I don't know what I with me. That's just it. Then I will show you an example how this market look like in some ray chart. Are you with me? Are you with me? So this is it. The market is creating, this is what we call a ranging market. A ranging market. Some call it ranging market. Ranging market. Ranging market. Or sideways. Ranging market. Or you can call it sideways. Some call it sideways. Some call it ranging. That's just it. So this is it. So let's see. Ranging. We talk about ranging market under the market structure for beginners. Market structure for beginners. Okay. This is just it. 1, 2, 3. Trending markets, either bearish, bullish, or bearish, forming higher highs and higher lows. Then bearish, lower lows and lower highs. Then ranging market. It's not breaking anything. It's just creating up and down movement. So let's see what we can have. Okay, let's take a look at this market here. Let's take a look at this market. Okay, from this point here, okay, let me create a box for you. This point here, you can see that from this point here, if you watch it very well, you will see that the market is ranging. It's creating up down movement. You have to draw your arrow. You will see that, okay, let's start from here. This is the market touching, coming down, ranging. You can see the market. Ranging in this. This is what we call ranging in a real live chart. Okay, then let me show you what is bearish. Let's talk about bearish market. All right, we have a clear example here. From this side now, you can see that from this place you see the market is forming lower high to lower lows, coming down, giving you a downtrend to the downside, ranging. I believe okay, so you can see the difference. So you can see it down, up, lower high, lower lows, lower high, lower lows, lower high, lower low, lower high, lower high, lower low, lower high. So you can see the market creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower up till it reach a certain zone. I believe you guys are following. So without wasting much of our time, let me just show you a bullish market. A bullish market. Let me just show you guys a bullish market. Okay. So a bullish market. A bullish market. A bullish gold market. So when you're able to learn market structure, you can tell where the market is going. Where the market is going. What is the market forming? Don't worry. You're getting here. So let's use this one for example. A bullish market. If you can see, the market is creating higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. That's what the market is doing. The market is creating higher lows, higher highs. That's what the market is doing. And let me see, let me find something different. Okay. Okay, the market is forming higher lows, higher highs, higher lows, higher highs. It's going up, you can see. Higher lows, higher highs, higher lows. Waiting for this one to break to the upside if possible. So this is what's called a bearish market. So market, as you can see it here, it's easy, right? Markets have to like move in those directions. So that's the direction that market is moving. So this is what we call, this is what we understand. This is market structure for, you can see with clear example from the chart. So watch and subscribe to my channel. Subscribe to my channel. Join the Telegram channel, which will be updated very soon. Then let's go more. This is for beginners class, so we will talk more in our next class. Thank you.